I thought about how we could set up a business that did those things. On the one hand, created kind of that kind of flexible workspace amenity provision that I knew wasn't going away, but we could do it in a risk mitigated way, but also was a purpose-driven business, i.e. it had a reason for being beyond pure profit. It had a mission. And that's when we started thinking about, okay, could we actually use it to create kind of really inspiring, flexible, innovative, kind of, sustainable spaces that we could house these types of businesses. I think landlords are having to think a lot more outside of the box, and at the same time, people who are taking leases are looking for a lot more amenity and hospitality within the workspace, and the landlords have to work out how they can deliver that as well. So you've kind of got this double whammy of how do I fill buildings and how do I make them amazing, and how do I create value.
Quick one from me. If you haven't already subscribed or followed this show on the podcast or app where you listen or watch, please do. It takes 10 seconds and helps tremendously. I've got really big plans for the People Property Place podcast, and that one small action really, really helps grow the show and the presence and enables us to keep doing what we're doing. So if you haven't already, please follow or like on the platform you watch or listen to. Thanks so much. Welcome to the People Property Place podcast. Today we are joined by Rupert Dean, co-founder and CEO of x+why. Bored by conventional thinking, Rupert, along with his co-founders Phil, Nevin and Tayna Donald, started x+why to unite a community of mission-driven entrepreneurs, leaders and companies within inspiring and sustainable workspaces. x+why enters into management agreements with landlords to design, manage and operate flexible workspace to create more profit than they would otherwise through either operating the space themselves or from a conventional lease. Rupert is a graduate of Bristol University, having studied history before training to become a solicitor, and worked at SJ Berwin, Maples and Calder, as well as Sunbird Group before setting up x+why. And it gives me great pleasure that he joins me on the podcast today. So welcome, Rupert.
Thanks very much for having me, Matt. It's great to be here.
Not at all. Well, look, you've had a couple of different careers and iterations. And a question that I normally ask people is how and why did you get into real estate? But I think if we rewind the clock a little bit, you did history at Bristol. Real estate wasn't your first career. Can you just talk to me about that, that early part of life and deciding to go to...
You're right. Real estate wasn't the natural thing I'd aspired to do all my life. And the reality is that when I went to Bristol, I actually didn't aspire to anything at all.
I can't believe that.
Other than having quite a good time at university. And then it's sort of the obvious thing when you go to a red brick university that you kind of, you work out whether you're going to become a lawyer, banker or accountant, really, if you can, So your dad says, get a qualification and you go, okay, I better do one of those three things. And obviously I wasn't necessarily coming from a sort of numerate degree in history. So it was quite an obvious path was to go and become a solicitor. So I became a solicitor. And I was, as you said, at SJ Berwin, which is no more. I have to say, it went into administration, but not as a result of my input. I hasten to add, I was long gone by then. But anyway, so I did that, and I didn't really enjoy it. It is the polite way of saying it from sort of very early on. But I wasn't that bad at it, but I didn't really enjoy it, and I was always looking for, I think, a path to doing my own thing. If I'm really honest, I quite enjoyed being my own person. I really didn't enjoy being told necessarily what to do all the time. And I quite often, when you're a lawyer, certainly a solicitor back in those days, which is 20 odd years ago, was it was really just about the bottom line. It really was just about how much money you made on a monthly basis. And quite often you didn't really need to know that much about the underlying business that you were either buying or selling, or the management team that you were supporting or were counterparty to. So it was culturally quite void, but also really difficult to leave because you're earning, decent amount of money. And the long and short of it is that there were a couple of guys who were setting up a business operating a kind of outsourcing services business in Africa. And they asked me to join them as a partner to help, particularly on the sort of legal and commercial side of life. And that seemed like a really good opportunity to get out of doing law. Because actually, it's really quite difficult to get out of doing law. And everyone thinks you're just a lawyer, and it's very difficult. So we went off to Africa, basically.
So before that, what part of law did you specialize in? And was there a particular industry or niche? And you touched on also it's hard to get out of it. Is that because earning potential and just your career path is laid?
Yeah,
out in front of you?
It's a classic problem with anything, I suppose, is that you're paid a certain amount, which is hard to come back from. What you don't realize at the time when you're 24, 25, 28 is that there's loads of potential to move around. But you think that actually to go a step backwards, to move into another industry or to do another job that pays you, say, even slightly less is actually too difficult to do. But actually, if you could tell yourself something completely different now, you would say, no, you just go for it and do whatever. Your earning potential is sort of 30s, 40s and onwards, right? And loads of it. So there was always, but no one tells you that, right? And everyone just says, make your own way. But I was a corporate finance lawyer. So we used to represent businesses who were either being sold or being bought, and management teams within those businesses that we were generally private equity backed. That were either doing management buy-ins or management buyouts or incentivization packages in some way. And then it is quite difficult, yes, because of the earning potential, but also because people see that you're quite an expensive person. If you want that salary and you want to go straight into something else that is completely different from law, for example, which is what I really felt like I wanted, then it is quite difficult. What I found actually the most difficult thing is to work out what you wanted to do. That's the ultimate issue. Is you go, look, all I know is, like I said, having fun at university, didn't know what I wanted to do, fell into this job. Where's the why? What's going to get me out of bed? Where's the purpose that I will thrive in, even if it paid me hardly anything? If I did a really good job at it, the potential could be there. And trying to find what that passion is really difficult, and you get trapped in that. And you really, the only way I felt to be able to find it is to explore different ways. So hence I went off to go and join these two other people in Africa, because I felt that was just a really good opportunity to dive right into the deep end, cut cords, wouldn't be able to come back into law necessarily, and therefore just take the plunge and see what happens. And that was that.
Growing up, what kind of kid were you at school? Were you particularly academic? You touched on kind of the numerate side, not so much, given you did history at Bristol. Were you kind of wheeler dealing? Were you kind of top of the classes, or? No,
I wouldn't say so. I was probably okay at most things. I wasn't not numerate. I was better at the arts, and I really enjoyed sport. I would much rather be on the sports pitch than in the classroom. I would 100% be cramming my revision. I was pretty disorganized in my approach to exams, but I would do all right because my short-term memory is quite decent.
Gamified it.
Reasonably articulate, could be a bit cheeky, but also could use that to get away slightly with things from time to time. But I don't think I was ever like the most ambitious person. I always lived kind of for that day or that moment or that bit of fun. And when life got serious, that's when it all sort of had to slightly change. And when I look back on it now, it's kind of a funny thing. But no, I loved it. I loved it all. I was sent off to boarding school from 7. And I went all the way through, and that kind of shapes me as to who I am today. Life is all about those sort of experiences, not school necessarily, but the jobs you do, the people you meet, the kind of, frankly, the muck-ups that you make, the mistakes. And that's what kind of shapes you today. And even just like being a lawyer, there's no way that I'd be sitting here and talking about X and Y, having set up a business, were it not for, being a lawyer and seeing the opportunity for either risk mitigation or commercial upside that I certainly wouldn't have been able to do had I not been a lawyer. So even just those times when you're not enjoying something, they're still good. They are still positive as long as you are not, monging out, doing absolutely nothing. Having some sort of outlet or output or something like that, or objective in life is always a good thing. So yeah, hopefully that answers that.
One question before we kind of come on to the African part of the journey is your parents, were they lawyers or in property, or were they?
No. So dad was in the army, always had been, was army the whole way. So we used to live in Germany a lot, which is why I was sent to boarding school quite young.
Which regiment?
So he's in the Royal Horse Artillery.
Okay.
So he's a gunner. Actually about to celebrate their 50th wedding anniversary, so busy organising a speech for that. But and mum was always an entrepreneur. So mum always had a fashion jewellery business, multiple different guises and names and that sort of thing. Mail order, some retail shops, this sort of thing. And that was her sense of, wanting to do something. And I think that is the entrepreneurial streak that kind of runs, I think, through us all. I'm the youngest of three brothers. So I always, roughly got what I wanted if I shouted loud enough, or had to eat faster, or get things done really quickly if I wanted to get, a voice. And so I think we all, and certainly my brothers, I think also have all set up their own sort of things in the past. My middle brother's now a doctor. My older brother lives in Dubai. But we all have at some point or another always wanted to set up our own business. And I think a bit of it could be because also we rebelled slightly from dad being in the army, because the idea of someone telling you what to do, being on parade, ironing your trousers at 3 a.m. and all those sort of things, we were like, no, we don't want to do that. We don't want to be shouted at. I don't want to be told to do 35 press-ups when I don't really want to do any. And actually we wanted to do our own thing. So I think between mum and dad, there was sort of a healthy kind of streak into what we became.
It's really interesting. I've got a very similar upbringing journey. I'm the eldest of three boys.
Okay.
I was born in Germany. I was born
in Germany.
My dad was a helicopter pilot in the British Army. And I can relate heavily to kind of that, not rudderless, but my dad wasn't necessarily commercial, or didn't have the awareness or connections outside of the army to start. Maybe get into property, or go and be a stockbroker or an engineer, or whatever it might have been. And so I can completely relate to everything.
Yeah,
you
it's
just said.
valid. I mean, it's exactly. I don't want to. It's like it's the tiniest violin, isn't it? But it's. But you're right. But that's fine, because I was given every opportunity to be able to make the right decisions by the level of education that I was incredibly lucky to be able to get. And that does provide openings and opportunities that, others or you wouldn't necessarily otherwise get. And so despite that, and you are 100% right, that it doesn't necessarily lead you in any one particular direction or inspire you to go in any one particular direction, you still have a lot of opportunity to work out what direction you want to go in. And I think that's a privilege.
100%. Talk to me about Africa. You left law headfirst into a move to Africa with a couple of other people. Can you just talk to me about what you were doing out there and what your role and remit was? So
there was a couple of founders of a company called the Sunbird Group. And it was the main... I guess the CEO of Sunbird Group was someone called Michael Aldridge, whose father was Sir Rod Aldridge, who had founded Capita, the listed, FTSE 100 listed business. And Michael and Will Sykes, who was an ex-banker, had seen an opportunity to operate, I guess, a services business with a similar DNA to Capita on the east coast of Africa. So there was a lot of foreign investment going into Africa, and particularly into East Africa. And it had become kind of, I don't know whether I can say this, but sort of a proxy for a bit of a Cold War, because there's a lot of Chinese investment coming in, a lot of Western, particularly American investment coming in as well to challenge that. And a lot of it was going into kind of real estate, into commercial real estate. And they would be really nice buildings, but after a bit of time in that sort of environment, they would be really weathered. There was no onward services basically to those buildings. So the idea really was to create an integrated platform of development finance to be able to, finance the development of new buildings with certain foreign investment, to be able to build the buildings themselves. So we bought a construction business, which we can always come back to because that's an experience. And then the sort of facilities management, property services that go with those buildings to be able to fully service them down the line. And then that was more what we would refer to as blue collar services. And then as the market adjusted, you could then introduce more white collar services, HR, law, all of those sorts of things to a sort of captive market.
Yeah.
That was the idea. And as they say, in Africa, you want to keep things relatively simple. And that was pretty complicated. So we made a ton of mistakes, which was all fine, all part of the learning experience. We raised lots of money, and personally for me, it was an MBA, right? It was an MBA on the job. I learned so much about certainly corporate finance, the fundraising, both equity and debt, finance generally, a lot of sort of accounting skills. But most importantly, actually, what came out of it was that one of the things that I led on was the acquisition of a serviced office business in Kenya that had offices in Uganda and Tanzania as well. And I got into it. It was one of those things. As I was talking earlier about where you find your passion, that was the moment where I thought, actually, I really kind of understand this model. I understand why people are doing it. It was at the birth of WeWork and their growth, spectacular as it was at the time. And I went off to see a guy I was recommended to go and see in Amsterdam, right, who was described to me as the godfather of serviced offices. Who's a guy called Sipi Finstra, and he had his own business called TOO in Amsterdam, really successful. And I'll never forget, he picked me up at Schiphol Airport, and we went to his offices, and he gave me about a day, right, incredibly, about a day where he just spoke to me about everything you needed to know about this asset class, how you model the commercial side of it, what you should and shouldn't do it, the sort of KPIs and that sort of thing. And I just remember just being genuinely interested, when you sort of have a click moment where you think, actually, this is like weirdly quite interesting, and I can see why it would work. And anyway, that was my kind of education into the sector. And we took that, we put in and improved the serviced office business that we had in Africa. We grew it out, and what we would do there is we would have anchor deals with very large multinational corporates like Siemens and European Investment Bank and Halliburton and people like that, and we would find them office space on flexible terms. That would underwrite the cost of taking excess space in that building that we would then carve up into traditional serviced offices, and therefore that was your risk mitigation profile for any new building. And it was great, and that we grew that, and it was brilliant, and everything else sort of stopped. So all the development finance side, the construction side, the facilities management side kind of stopped, and Sunbird became what's now described as, or is now called Kafisi, which broadly stands for co-working in Swahili. And that's what they're now purely focused on, is kind of hospitality-led serviced office space across predominantly East Africa, although the last thing I did was a deal with Google in Lagos. So that was, it was always the rule, like, we're not going to West Africa. And then, and we were very bad with rules because we were quite entrepreneurial. And then Google came and asked me whether we'd set up something in Lagos. And so we obviously said, well, clearly we'll do that. So anyway, so that's the only outlier in West Africa, but they're now doing other stuff with Google in kind of Central and East Africa. So
that's how you got into real estate.
That's my intro into real estate. Yeah.
But your training and the exposure that you had as a solicitor, there's a lot of transferable skills there that you could then leverage and apply to the real estate world.
Yeah, 100%. I mean, it's commercial, right? So you're thinking about how you can make money out of this, which is you do get a little bit from doing enough corporate finance law. It's risk mitigation in that you look at it and you go, I don't like the buy long, sell short model. Like, how do we mitigate that? Which is why we came up with these sort of anchor clients that we would go after to see whether we could put them somewhere. And the bit that you kind of have the least experience, ironically, coming from a corporate finance background, is the corporate finance side of it. So it's actually more the pure finance side of it. So, how you're running accounts, your P&Ls, your balance sheets, your cash flows, and all that. But, as a result of being kind of passionate about it and understanding the business model, you can pick that up like relatively fast. I mean, you're always learning, right? But you get the basics pretty fast. And we had enough good people within the kind of the corporate finance side of life that we had a sort of central accounting and finance function that were really good. So that was helpful. But yeah, wouldn't have been able to do it had I not been a corporate finance lawyer. I also did all the structuring, right? So I set up all of the companies in Africa, in the UK, looking at various tax implications, et cetera, and to make sure that it was as efficient as possible, that we weren't overloading companies, and that actually, even just generally from an accounting point of view, it also worked. So wouldn't have been able to do that had it not been for the corporate finance stuff. So.
You were with Sunbird for 4.5 years?
Yeah.
Living in Kenya?
All over. I mean, I'd do 3 weeks a month sometimes, just going, I'd go Kenya, I'd go to Dar es Salaam, Tanzania. I'd go to Maputo, Mozambique. I'd go to Uganda. I'd go to Zambia, and then I'd usually end up in South Africa. And if I could work it, usually in Cape Town, but quite often in Johannesburg, where we had an office. And I think I used to fly most of the time via Doha because I wanted to get the points.
Right.
So I think I must be one of the fewest number of people who managed to get a BA Gold award just from economy. Purely economy. I'd only ever fly economy because, we were a cash-strapped sort of business and we tried to be as fiscally responsible as possible. And so, yeah, I would always go via Doha, and I think my record layover there was about 14 hours.
Just to get
to gold, only for it to get taken away a year later.
Yeah, because you just don't use it.
Yeah, but no, I think the point was that I was having my wife had one and was probably expecting a second child on the way, and it was not sustainable to continue to go traveling. I didn't want to move out to Africa. I was pretty clear about that. I never wanted to move full time. Didn't want to move the family over there, and my wife was pretty clear about that as well. So. The kind of moment, I suppose, that x+why was born was when we were doing one of our new fit outs for this serviced office business in Africa, and we wanted to get some debt for the fit out, and we went to the local banks in Kenya and we asked them, and they said that's fine, but your interest rate would be 18% per annum. So we thought, oh look, come on, we're a UK company operating in sub-Saharan Africa, we must be able to go and get some cheap debt from, foreign investor donors, so the IFCs and the DFIDs and the OPICs of this world. But they said no. And when I asked them why, they said, well, the reality is you're talking about repaying this debt that we would provide through bottom line and expansion of new sites. And I said, yeah, but that's what we would do. And they said, yeah, but what we want to hear is like that you're promoting jobs, businesses between borders, Wi-Fi to entrepreneurs, mentorship, generally jobs, all those sorts of things. That's what we want to hear. We want to hear about the really sort of positive social impact. And if you can unlock that, then, we would be interested in having a discussion about providing cheaper debt than you would otherwise get. And I thought that was the time when I realized this connection between those companies that have really positive social aspirations and those that actually create more money. Reality, like those companies that do good also do well. And I thought that was really interesting kind of hypothesis, because most people think that doing well and the social aspiration was for social enterprise and for charity, not necessarily for the benefit of profit. And so when was this? It's like, 7 years ago, 8 years ago, and purpose-driven business wasn't really a thing. But you started to read more and more about the issues in the world that were happening on the front pages, particularly around climate change. And so I started looking into this. I started looking into this idea of what it was to be a purpose-driven business. And once you get into it, you realize there is a whole teeming amount of businesses, and particularly young businesses, SMEs, entrepreneurs, driven through, Gen Z and maybe even 30-year-olds who would only ever set up a new business that was designed to think about people and planet as well as profit. And then I looked at movements like the B Corp movement, the B Corporation, which is sort of, the highest sort of standard, I suppose, for responsible business across not just your impact on the planet, but also across your workers, your governance, your customers. And I sort of thought it was just a really, really growing sector and a really interesting thing. So I thought about how we could set up a business that did those things. On the one hand, created kind of that kind of flexible workspace amenity provision that I knew wasn't going away, but we could do it in a risk mitigated way. But also was a purpose-driven business. I.e., it had a reason for being beyond pure profit. It had a mission. And that's when we started thinking about, okay, could we actually use it to create kind of really inspiring, flexible, innovative, kind of, sustainable spaces that we could house these types of businesses at all stages, right? From those that were B Corp from the time that they were born and were leading the way in terms of what a purpose-driven business should look like, and those companies who were interested but had never thought about it and were maybe a bit slower to take it up but wanted to. And you could corroborate and collaborate those types of people in one room, and you could track the kind of progress that those companies that weren't necessarily doing it as much as they possibly could do, and see whether you could prove that connection basically between doing good and doing well, i.e., were there people staying for longer? Were they making, more money? Were they genuinely making an impact on the planet? How were they doing that? Were they making meaningful connections? Were people staying longer, less sickness, that sort of thing? And that was what the sort of blueprint for x+why was.
So you left your job, you dropped your gold card with BA, you stopped doing your miles. You had this concept. How did you take it from concept to an actual reality? Obviously, can you talk about your co-founders as well in terms of their roles within this, but also raising capital and actually getting the idea in motion?
Yeah, so the first thing was my wife is a very good accountant, and she was very helpful with helping me build a business model, which I was pretty au fait with. I knew the broad concept was what I just described, but also that we didn't want to enter into leases. We wanted to take management agreements. This is obviously sort of 2017, 18 that I'm talking about here. So management agreements, not what they were, in fact, sort of blackballed, but I still wanted to do it that way. So we built the model and did a very basic pitch deck, which without a name or anything, but just a very basic pitch deck. And I took it to a couple of potential investors and sort of just to broadly and crudely work out what the feedback would be. And I remember going to somebody in particular who said, it's a really interesting idea. You should talk to Phil Nevin about it, who's had a similar idea, but within the university sphere, i.e. looking at how we can create kind of more purposeful approach to university and halls of residence and that sort of thing to make universities sort of slightly less about what I described it as for me, which was just fun at the expense of everything else. And so I went to see Phil, who I had been at university with and had also been part of a world record setting bunch of people to do the marathon all tied together. I think there were 34 of us all tied together. And the comment
so you all tied together and you did a marathon?
Yeah. So basically it was Virgin Money. It was the first year that they had decided to sponsor the London Marathon. and Richard Branson wanted to go as a butterfly, and he wanted his daughter Holly and his son Sam to be a caterpillar running behind them. And I knew Holly and knew Sam, and they asked 34 people basically to be connected behind them as a caterpillar, all connected by sort of bungee, and to follow behind Richard as we ran through. So that and Phil was part of that caterpillar as well.
So he was asked.
So he was asked, and actually Holly was the common connector and was the one that I went to say, what about potentially investing into this? And she was the one that said, speak to Phil. And anyway, so Phil got it, loved it. His background is in very high-end residential development. So he knew what good looked like in terms of, quality real estate, essentially. And it does translate relatively easily from resi into good quality hospitality.
Increasingly
workspace.
So, right?
Exactly. And I'm sure we'll talk about that. But so he got it, and then I asked Tayna to be to be the CFO, which she was relatively reluctant to do at the beginning, which is fair enough. Anyway, and so it was the three of us were sort of joined by this relatively loose framework of what we wanted to do, and then over time we just spent a bit of time just tightening it up, and we built a deck that was much better and was really clear about what we wanted to do, about this idea of uniting purpose-driven businesses every day, inspiring them, and then amplifying what they were doing. And so we took that and we took it to Holly, and we took it to somebody called Lord Rumi Verji, who had originally founded Domino's Pizza in the UK. And we took it to a couple of others, including Richard Reed, who is the founder of Innocent Smoothies. And we raised some money through, those sorts of people. And we were off basically to the races. And the first building was actually one of Lord Verji's, which he had just bought in East London, which then became People's Mission Hall, which was our very first site in East London that opened in April 2019, I think it was.
So he was capital as well as real estate.
Yeah, and I think, there was quite a lot of that in terms of people saw the opportunity and they said, I kind of like the idea that I see that there is a potential in this ongoing flexible workspace idea that people don't really want to take long-term commitments and they don't want to pay the cash to do big-time fit-out, only to then have something happen to their business plan, which meant they either outgrew it or needed less space or had cash crunch or whatever and needed more flexibility. So they so Lord Verji got the idea, and he was in real estate, so he was able to do both. But I think you see that increasingly, obviously, with lots of people who are in real estate who say, okay, I want to do this. I don't know how to do it. I want to get somebody to come and do it. But if I'm going to provide the real estate, I also want potentially a piece of the operating pie as well. And I've seen that a fair amount actually in the sector. So it's a great way to get on the ladder if you are a new operator wanting to come in.
Someone who's listening to this who doesn't know what a management agreement is, can you just explain what a management agreement is and why is it different to a traditional lease?
Yeah, so under a traditional lease, X and Y would enter into a lease with the landlord for 10 years where we would guarantee a rent, essentially. And we wouldn't have to pay the landlord any more than that, but we would take the risk on paying that rent. We would take the risk on all the operating costs, including things like business rates and service charge. And if there was ever any issues, i.e. we couldn't fill the spaces for whatever reason, we would have the burden of constantly always paying that rent, notwithstanding how business was performing. So that's what I mean about buying long, selling short. So you're taking a long-term lease commitment, you're carving it up into licenses for short-term, for people to enjoy on a short-term. So you're taking that long-term risk. Sure, you're charging more per square foot to the underlying tenant, but still you're taking that long-term risk over a 10, 15-year period or whatever it is. A management agreement, obviously, in my opinion, is a lot more of an equitable arrangement between a landlord and an operator where we are essentially not entering into a lease, we're entering into a management agreement whereby rent, as it were, is coming out of the profits that you're making. So in good times, which usually you hope there are, you are essentially paying the landlord more than they would get on a lease because your profits are good. But on a downtime, and obviously we'll talk about COVID in a little bit, that springs back, right? So you are taking a more equitable approach. You also sometimes, quite often, don't have the operating cost risk. So, for example, if with startup capital before you're a minimum amount occupied, there will be some working capital requirements. Usually, you'd have a conversation with the landlord about doing that. So, it's a far more, I think, as I said, equitable arrangement between landlord and tenant. It's much more what you'd sort of typically see in the hotel industry.
Yeah, that's where it's very commonplace, isn't it?
Exactly. And I think most of the management agreements, there are 250 ways, I think, of doing them. And I think that it's becoming much more refined, and it's becoming much more refined around the framework that hotels have set, which is, kind of fair enough. And management agreements are now, really prevalent. In fact, I think the majority of operators will be doing it now, and the number of operators who are doing straight up leases, other than on exceptional assets, are fewer and far between now.
Because it's a partnership, and it also stops
Correct.
what happened with WeWork, which is they'll just put the agreement in an SPV that's ring-fenced from the wider business. And so if they can't afford to pay the rent, they'll just shut that business down, and the landlord's left high and dry.
Yeah, that's right. And I think that when it all comes back quite often to the valuation of the building, right? So the value that someone puts on a building is based on the yield, which is based on the covenants of the leases that are in there. So if you've got IBM or Apple taking a 10-year lease in a building, then you are sitting on a very low yield and a very high value building. And that is typically then a developer would flip that. So they would want to fill it with good, strong covenants, leases, and then sell it to a pension fund who would then run it and take the cash for 10 years. And that developer would then go and do it with a bigger building, basically.
Yeah.
And so with the SPV, and I think a lot of people were doing the SPVs, what we realized during COVID is that they were basically worthless, right? And especially when something like WeWork, which had such sort of big exposure to the buy long, sell short element, that actually when that decided to die, the covenant attached to even that SPV was so low. And then that SPV itself, they could just crunch and get rid of. So actually it was almost entirely worthless if in a worst case scenario. And you're sort of seeing it now, I think, with those buildings where WeWork are in and they have leases, is that actually the value of those leases is really impacting the debt that the landlords are able to put against that building, because the
banks aren't going to lend to it.
They're not wanting, well, certainly not at decent interest rates, certainly not in this market.
Yeah.
And certainly not, the debt to equity ratios you probably could get on your balance sheet before. So that's why I guess somebody used to describe it as, I guess, the imperialist model of traditional landlords. It's kind of changed and it's slightly broken. And I think landlords are having to think a lot more outside of the box. And at the same time, people who are taking leases are looking for a lot more amenity and hospitality within the workspace, and the landlords have to work out how they can deliver that as well. So you've kind of got this double whammy of how do I fill buildings and how do I make them amazing, and how do I create value, basically.
So you opened your first site, was it shortly after September 18 when you set up the business, or?
Yeah, so raised money in I think you're right, I think it's September to December 18, and then opened at People's Mission Hall in April 19, and then opened our second building in March 2020.
Perfect timing.
Perfect timing. Yeah. So there's the thing, right? Because obviously we were in management agreements, and we were just able to essentially work with the landlords and say, look, let's just keep people, let's do the best deals we possibly can. Let's not think about the bottom line. They weren't in a position necessarily to be greedy. They were like really practical about how we went it, which meant we could really focus on going to the tenants at the time and just say, guys, we get it. Here's a deal. It's amazing. Stay, do whatever you want, blah, blah, blah. And it meant that, we didn't lose as many potentially as we could have. And so that kind of management agreement worked, whereas those operators that had traditional landlords were having to fight tooth and nail with those landlords to get some sort of break that they then had to pass on to their, members or tenants. And therefore were able to do a lot less. And the communication, you can imagine, had to happen at 900 miles an hour in real time to both sides of that equation. And the quicker you could move with your tenants, the better chance you had. So if you were slow / couldn't do great deals, you were going to lose them. You were going to lose, a massively material number of them. Whereas I think we were able to actually work really fast with our tenants and be able to just put good deals in place. And the landlords basically just, we just had to be transparent with them and say that was the best way to go. But at the same time, once you got over the kind of 3 months of hell that was between, March, April, May of that year, because it was management agreements, we were able to go out and do quite a lot of business development. So we went and saw where other operators were unfortunately having real difficulty and real crisis because of leases. We were able to go out there and start talking to new landlords about opportunities, and I think landlords started to see, particularly really progressive ones, started to see the opportunity for management agreements. And a lot of them started to see actually this is going to change a lot of things, particularly over time, as it went from 3 to 6 to 12 months to 18 months. People started to think, okay, people are going to want different things when they come back to the office. How are we going to introduce more amenity? How are we going to introduce more hybrid working, initiatives, all of that sort of stuff. So we were in a great spot, basically, because of where we were to be able to make the most of that. So we came out of COVID with, a lot of new sites and a lot of new relationships and partnerships with really cool landlords, which is great.
Can you just talk to me about the business today? Like, how many sites have you got? Where are they located? And also a little bit about the team too.
Yeah, so we manage about 400,000 square foot across the UK at the moment in Manchester, Birmingham, Milton Keynes, London, hopefully into other cities fairly soon to be announced. And we operate sort of all amenity, not just desk and chairs. So we'll do front of house, we'll do club spaces, we'll do food and beverage, we'll do events, we'll do wider meeting rooms. We can just do the amenity in those spaces. We don't necessarily have to do the kind of the flex workspace at the same time. Because I think a lot of people have just generally, a lot of landlords are just generally really struck by how to put in good quality office space, amenity space, but don't necessarily want to take the valuation issue of a management agreement on the office space. So we quite often work with landlords on just doing, members club spaces, which are typically amenities with kitchens and bars where you can, eat, drink and access meeting rooms and event spaces and that sort of thing, which is obviously like really popular today and hopefully drives greater lease pricing for the landlord across the other floors. So a lot more democratization of really quality space in buildings. So about 85 people now, x+why is. And the idea is that x+why itself is a kind of thin bunch of really kind of quality operators who support the teams on the ground in each of the sites. And yeah, like I say, we kind of operate across traditional desks and chairs, but we will also do high-end hospitality. So members club spaces and event spaces across our various things, which means we're very into sort of food and beverage, kitchens, chefs, sous chefs, porters, membership managers, all those sorts of things. So always trying to activate buildings to create kind of best-in-class experience wherever we can, as a shared kind of vision with the landlord, basically where they want to do it.
So you're in proper partnership with them.
Yeah, it's total partnership. We'll give the vision that we think. So we'll say we'll look around a building and go, what sort of thing do you want to do? And here's kind of what we could do. And we have an amazing in-house design team now that can design these incredible spaces. And the landlord can tweak it, change it, do whatever. We'll provide the numbers and the business case for it. And then hopefully they're up for it. And, we'll enter into a management agreement and we'll design it and build it and operate it, manage it, and report regularly to the landlords as needed. And generally landlords get involved as much or as little as they want to do. Some will want to get involved in the minutiae. They want to know what the color is of the curtains, and some will just say, just report to us on a quarterly basis and we trust you to do it. So fundamentally, our business is set up to be a partner with landlords, is basically the way I could describe it.
Where does data fit in to this?
Yeah.
And is that increasingly important in terms of kind of tracking usage or tweaking parts or how you configure a particular building?
Yeah, data is really important. So with these buildings, you're typically never finished. You're always doing something to the building, whether that's pushing through walls to create more office space or more meeting room space, or changing the staffing levels to suit the amount of revenue that's coming in and times that people are using the space. So you're always using data to be able to identify what you can do to create either a better experience for the underlying member or customer, as well as kind of more revenue, I suppose, or saving cost to be able to get a better bottom line. And those two obviously go hand in hand. You can't just be totally bottom line driven. You need to think about the customer experience at all times. But generally, in order to be able to marry those two to create kind of the best building possible, you've got to rely off data, which obviously quite a lot of that is around the systems and the process that you have in place. And food and beverage, for example, is very different in terms of its systems and processes than, say, traditional kind of desk and chairs workspaces. So we have two very different processes and systems on those sort of things, which is broadly a nightmare, but is needed. And then you can work out, for example, with food and beverage, the biggest issue is waste, right? So how do you control, stop waste? How do you manage stock? It's a very different kind of problem to how can we use space to create as much revenue generating space in a workspace. Yeah. So there are loads
upside
of different
versus downside
exactly.
as well.
Exactly.
And then you're responsible also for going and finding the tenants, or working with brokers to put sustainably minded, B Corp driven or impactful, purposeful occupiers into your space, right?
Yeah. And I think, just to be really clear, they don't have to be that way. Our members are, we have such a different range, as you can imagine, from kind of high-end professional services firms and hedge funds to creative entrepreneurs who are starting up a business. And it's more like the collaboration or the corroboration, if they want to, between them. But generally, our spaces are very high-end. They are hospitality-led, so we will be kind of more food and beverage provisions into general amenity, obsessed by having kind of fun and aspiration into the office space rather than just sitting at a desk all day. And so we definitely wouldn't say you have to be a purpose-driven company or business. We will amplify you to the max if you are, and we will put you on a pedestal, and we'd love to partner and become a serious ally of those that are. But generally, anybody, with exceptions, obviously, can become a member. Every member has to sign a pledge. So within the license agreement, and nobody's ever marked this up or said no, but within the member agreement that we have with our members, everybody signs a pledge to people and planet broadly, as well as profit, and which is taken a lot from the B Lab or B Corp framework that you sign if you want to become a certified B Corporation. And that means that everybody has subconsciously made this commitment in some way to people and planet as well as profit. And I think that's really interesting because regardless of whether you're from a hedge fund or whether you're from a sustainable balloon company, you come together, there is some sort of like a Venn diagram meeting where you've got something which I guess combines you. But quite often they don't meet, and you don't have to, and we're not soapbox preachers about it. And if you just want to, do your work, that's cool.
You touched on fun within that, and I know you put a lot of emphasis on having fun at work, which is really refreshing because I think people do have fun at work, but they're not necessarily as overt about having fun. Work needs to be kind of more serious. But you suddenly, in the interactions and dealings that we've had together, you put an awful lot of emphasis on having fun. Where does that come from?
Well, surely, like that, when I spoke about my times at university, like where there wasn't any aspiration. It was just about having fun in the moment. No, I think it completely changed. And I think that people realized, so when I was a lawyer, like I said, it would be, you would come in, you would come in at a certain hour and you wouldn't leave before a certain hour, right? So you would, and that's the classic putting your jacket on the back of the chair to show that you're still there at 7 p.m., 8 p.m. in the evening. And what is the point? Like, what is the point? Why are you not measured on, productivity, for example? And so it kind of, and then COVID came along and everyone questioned, do I really need to sit at this desk in this office to prove productivity? Or can I prove productivity by just doing my work? And if I'm sitting at home doing it, then that's cool as well. So slightly shifted what the office became about. And actually it became about mentorship, fun, engagement. And that's what we're just kind of reflecting in what we do. So, if people want to go and use amazing breakout spaces to go and, have a group meeting, or they want to go and do a team bonding with some gin and tonics and a beer, that's great. And for me, I'd much rather come in and do the latter than I would necessarily to come in just to come and sit at a desk. I'll come in for a reason. I'll come in for a meeting, or I'll come in for team drinks, or I'll come in for drinks with someone else. But you've got to have fun with these sort of things, because if you're not having fun, and then what's kind of the point? And it is something that we constantly try and remind ourselves about as we're completely exhausted. But you do need to have fun, and sometimes you can realize that actually you completely miss the high five moments. Certainly something that with a business, when you're starting up, you move on very, very fast from any success to the next thing, to the next thing, to the next thing. And you never stop and go, well, how do we high five this moment? How do we celebrate this moment? How do we get everybody else involved? How do we mark this as a serious milestone? And that's just something that I've always got in the back of my mind about how we can do that better. But we still don't do it as well as we should do, really.
Can you share the details of some of the landlords that you partner with? Or if you're not able to do that, are you be able to share some of the names of the landlords you'd like to partner with? And I'm assuming they're kind of bigger institutional businesses that have got big portfolios that you can kind of scale across multiples of their different sites as well.
Yeah, they really range. I mean, obviously the first one was with Lord Virgie, and kind of that high net worth area is quite interesting, because generally we partner quite well with people who think about long-term commitment to real estate. So generally, because as I mentioned earlier, people wouldn't apply as good a valuation on a management agreement as a lease. It's typically those people that therefore don't think about valuation, just think more about cash return, that we would typically work with. So they tend to think generationally. So if you think about landed estates like Portman Estate or Grosvenor or other estates that are out there, like we don't work with necessarily, but the Devaldens and Cadogan and people like that, from a London point of view, they hold assets for a long time. So they're always thinking about placemaking, which is very different from a developer who just wants to spin off and sell it at the first possible opportunity. Saying that, we do also work with some serious institutional investors, including Santander, HSBC, Tristan Capital, so lots and lots of others that have identified our brand and hospitality as a really interesting placemaking tool to increase the value in the rest of the building, but also to create something a bit different and something that's a bit more engaging. And I think that some people will use that, to increase the value of the leases and the rest of the space, but other people will use it as an amenity to fill the building or to do something, like I say, a bit different, particularly maybe if it's outside of a traditional location, for example, where you have to think slightly outside the box. Then you would, that would be a typical time. But generally, we will always try and identify assets that are in really, really good locations in different gateway cities around the UK.
So you touched on design and design-led space, and also that F&B element with chefs and the catering part. Can you just expand on that? Because and where are there similarities between hospitality or hotels, or just the hospitality aspect of it? Yeah.
So as I think you mentioned, Matt, earlier, is that there is actually quite a lot of similarities between kind of residential and office space these days. And particularly with hospitality. And what we're trying to do is work out how we can create a space that people want to engage with all the time, right? So typically what we found is that a lot of landlords are therefore looking at how you can create food and beverage within real estate, and people from an office perspective, or tenants, are asking how we can personalize space for them where they wouldn't necessarily have the same cash output as they would under a lease, for example. So we have built, or Phil Nevin, the co-founder, and who is our chief creative officer, has built a design team essentially based out of really kind of amazing backgrounds in places like Squire and Partners, to be able to design, I guess, hospitality-led spaces, and then being able to adjust those spaces over time. So we can design kitchens, which is a completely different skill, obviously, and a bar than a Cat B finished managed office or smaller office. And so that's, Phil's done an amazing job on that. We have this initiative called Why Design, where people can employ our design department to actually, create their own space, help them be able to design, manage, even pay for, to some extent, their own space that, built to their particular requirements. And that's happening more and more, I think, nowadays. And I think that's kind of good quality hospitality and design is basically what people are looking for. And for us, what we always wanted to do, we always wanted to be at the top 1% of kind of hospitality offering. I think there's a market always in the top 1% or the bottom 1%. So the bottom 1% is always people who want cheap, high, space that they can access really quickly and don't want to pay a lot of money for. And there will always be that market. And then there'll always be, regardless, those people that want the very best. And everything else is a bit of a bun fight to be able to distinguish and differentiate yourself. So for us, hospitality, food and beverage, ability to be able to be design-led was totally the requirement to be in that top 1%, which is why we built that design team. And Phil has done a really good job on that.
Well, when I walked into Cumberland Place, that's the name of it, right?
Yes.
Your HQ. It literally is like a hotel. And I hate the word hotelification, but that's what it is, right? It's the blending of the kind of the super luxury high-end residential or hotel experience with the office space.
Yeah, so it's the service with the fit out. So it's the design plus the service. So for us there, we are in charge of all of the amenities. So we're in charge of the front of house. We then tendered out the facilities management, but we run the end of trip facility, the front of house, the members club space on the top floor overlooking Hyde Park, all of the fit out on floors 2 and 3, which are the X and Y flexible workspace floors. So you generally get that amazing experience that flows through the whole building. So the moment you walk in, right, they will then communicate to the team that are up in the club space. You then arrive, they say, "Hi, Matt, really good to see you. Haven't seen you for the last 3 months." You get that incredible kind of experience and feeling that, that's what hospitality is. You're also in an environment that looks incredible. You go out, you have a meeting, you go to an event, and then you have a beer at the bar, right? That for me is an amazing experience based on hospitality, both from a design point of view, but also a service point of view. And that's why we quite often really enjoy running the service across multi-tenanted buildings. So most people just think, yeah, well, you would do the front of house if you were running the whole building, but quite often this isn't about us running the whole building. This is just about having really good quality amenity space throughout the building. But there'll be leases in there as well. So we might help the agents in terms of with them and their lease up by showing a potential new lessee around the club space or the facilities in the building. But you always know that from the moment you walk into that building, whoever's at that front desk is going to greet you in the best possible way. And it's going, that first and last 5% is always going to be phenomenal. And that's always been, the idea of being joined up in a hospitality provision.
And you talk about you decompartmentalize parts of your chain as well, right? And people can get access to different parts of that.
Yeah, what do you mean in terms of different spaces?
Yeah, different spaces. You touched on the design aspect just now.
Yeah,
you can do parts of the building, or
I think it's a really important piece. Right? I think people should be able to access club spaces. For example, we have club spaces in London and Birmingham that we want to introduce more across our portfolios. And I think that's a really interesting provision as a sort of, most people would have talked about co-working before, this idea that you can go sit down, grab a coffee, access Wi-Fi in an open plan environment. It's okay. It's cool. But actually, what is that open plan environment like? If we can introduce a kitchen with a bar, with really cool views and a really interesting service level, and people know your name, you're getting into much more sort of developed hospitality. And if people can access that sort of environment around key gateway cities in the UK, that's super cool. So that's kind of one of the things that we want to do, as well as the traditional kind of co-working, but also people can access through our app, multiple different meeting rooms across all of the buildings. The network is important. The network, if you want to go into, for example, Manchester and Birmingham, they also want to be joined up with Leeds, right? And people in Birmingham might want to access Milton Keynes because it's on the same railway, and people from Birmingham and Manchester might want to come to London quite a lot because it's, despite everything, it's still a central hub for the UK. And so if they can use X and Y as a single vehicle to be able to do all of their work and be able to access all of those things, not just for work, but also for their team to have fun, then, I think that's cool. I think that's what we're trying to do.
It's a big tick when it comes to talent acquisition and retention as well.
Yeah. But all of these things, particularly in our post-COVID hybrid world, all of these things are cultural. They always come back to we've got a low unemployment rate at roughly 3%. You've got quite a lot of transients, particularly in kind of younger generation of workers, a lot of worklessness. So what are companies doing to be able to promote that culture so that they are getting the best possible talent? So hybrid working is one of them. But then when you come into the office, what does it look like? How can you generate really good culture? And a lot of people will outsource that with the quality of their office space. And I think it is quite an important piece. So you can come in. Why are you coming in? Right? You're not coming in to just sit at a desk. You're coming in because you're coming in for a meeting, or because you're learning, or because you're mentored, or because you want to have fun and you're having engagement with the rest of your team, and you're not getting that sort of sense of isolation that you would do at work, at home all the time. So I just think it's changed. Fundamentally, it's just changed a little bit. But the idea and the war for talent and the connection between the war for talent and the office is super clear.
What's the biggest challenge scaling X and Y? What's the hardest thing to kind of unlock right now in terms of trying to scale the business, or maybe not just the business, just the kind of the sector right now as well?
I think culture is a really big piece. So the thing that probably keeps me up the most at night is how can we improve culture, right, within our business. So obviously when you're scaling quite fast, so we did 300,000 or 250,000 square foot last year. You're scaling fast, you're employing a lot of people. It can stretch your DNA in terms of what you're trying to do. It can stretch the kind of profile of the right kind of candidate, the right employee for X and Y. And you can therefore get some transients. And a lot of people equate that to probably not a great culture. And I challenge that assertion because we're still very clear on our DNA and what we want to do, but it is still a challenge. And we're getting a lot better because this year we've not opened nearly as much space. We've done a deal with Lloyd's for 60,000 square foot, and we've opened something in Marylebone, but it's relatively small compared to last year. So we're able to consolidate a lot better, which has been so good. So we've been able to spend so much more time focusing on culture through really good hiring practices, really good onboarding practices, and really good training. And that, if we can get that right, because actually people never forget about their first day at work. If we can get that right, then it sets you up so much better to be able to then create a platform for people to be able to thrive. And I'm not saying we're perfect. We definitely are not perfect. But we have got quite a good plan now to be able to do that. But that's still like the number one thing that I think most businesses, to be honest, will struggle with for the reasons we mentioned earlier about, unemployment and worklessness and that sort of thing. So culture, we're always looking for new buildings. There are a lot more operators these days. The world is slightly going back to some sort of normality in terms of leasing. So a bit trickier these days to find kind of high quality assets. But we're still doing all right, and there's still a lot of good things in the pipeline. But those are probably the two main things.
As we draw to a close, Rupert, a question I ask everyone on the podcast is, if I gave you £500 million worth of equity, who are the people, what property and which place would you look to deploy?
So I would introduce a kind of concept of hospitality and workspace. I would go with potentially a kind of combination of residential, members club, workspace, well-being, so like gym. And I would put it all in a single building, run through a single platform, obviously X and Y. But I'd love to be able to buy that building, right? I'd love to be able to buy it and develop it. So I would probably with 500, is that equity? Yeah. So you
Or
think
call it capital.
Okay, I was thinking we could leverage.
You can
that
leverage
quite
up to $1
handily.
billion.
But okay, you could then go and do a few of those, right, across kind of key gateway cities. You'd obviously have maybe more than one in London, but I'd love to be able to do that and do it with a development partner who understood that kind of hospitality message, basically. And the one thing that we slightly struggle with is the translation of what we do, which is management operations and development. So we'd love to partner with a development, finance business that has shared that kind of vision for hospitality and the sort of values of doing well and doing good, and be able to put it into really, really kind of central locations within key gateway cities. And not just gateway cities, I'd love to go into sort of other places like Oxford and Cambridge, for example. And I'd love to be able to do it in those sorts of environments as well. But that would be roughly what I'd do with that.
And any people that you bring along the journey?
Well, I suppose we'd bring, who would we bring? I mean, apart from the development finance team, I'd want to build like a best-in-class kind of F&B team that could absolutely nail it. I'd want to get a really cool kind of anchor client, maybe like an Innocent Smoothies or something like that, who could come in and be an anchor client and shout about all the amazing things that we're doing at the space. But otherwise, obviously, just the three best founders of x+why is all you need.
And the wider team. Well, look, yeah. Rupert, you built an amazing business, a purposeful business that balances purpose and profit and enables other people to do good as well. You've had a fascinating career, and I think people will take heart from the fact you actually took a step back to go forward, and you are constantly building the plane while it's flying as well. And I'm really excited to see what you and the team go on to build this year and beyond.
Perfect. Well, thanks, Matt. Thanks for those words. And thanks very much for having me. It's been great.
It's been a pleasure. Thanks for listening to this week's episode of the People Property Place podcast. If you found it insightful, feel free to share it with a friend or colleague. Give us a rating, like, or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of guests that we should have on the show or areas of the market we should explore further. So do drop me a message. The People Property Place podcast is powered by Rockborn. The team recruit leadership and future leadership hires for real estate owners, funds, investors, and developers. So if you're looking to hire top talent for your business, head over to the website www.rockborn.com, where you'll be able to find a wealth of information, or feel free to drop me a message on LinkedIn. Have a great day wherever you are, and I look forward to catching you next time.